The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We've got a couple of very, very interesting things happening today. Mainly, it is Valentine's Day. I want to wish everybody a wonderful Valentine's Day. And I sent everybody a box of chocolates. However, you know how bad the mails are these days. Whether they get through or not remains to be seen. Anyway, boys and girls, let's start out looking at the DAX like we usually do. You'll notice that it is not participating in this four-day rally that we're having in the stock market. So that is probably portending that there's more weakness coming in the market for the DAX, I would think. Now, if we take a look at the FTSE, we see a totally different thing where we've had a pretty good rally here over the past day or so. Oh, good. David got his. That's good. And I know that Maria got hers, and I know that Mark P. got his, so that's good. Anyway, boys and girls, let's take a look here at this FTSE. You'll notice it has a little bit of a bounce, but whether these are dead cat bouncers or not, remains to be seen. Our whole scenario here, if you remember, those of you that get the newsletters, we were expecting a very, very strong bottom to come in because of all the things that that were happening, over the weekend and on Friday with that action that we had. We had so many Fibonacci numbers hitting on the 7 major indices going through the utilities and the transportation, the Dow Jones, the NASDAQ, the S&P, the IWM, all of them hit those special numbers. And now we're coming in to the eclipse, which will be tomorrow. We have a solar eclipse and a new moon. And then following that, we have the Chinese New Year, which is the year of the dog. So if this market is really bearish, and we do not know that yet, the fact that it's down 30 points, it's actually down almost 40 points, 50 points from the high in the S&P, but 50 points is no big deal anymore, folks. I mean, these things are rocking and rolling. That's why we've got the volatility index jumping around, the way that it is. But I have a better, more better than a box of chocolates for you today, and we're going to cover that when we come up to the first break that we have here. Right after that, we're going to spend a good. This is Mother God and Country. It is history books. It's walking down memory lane. It's all the reasons I've been in this business for so long, so we'll see if it works or not. But, boy, it sure looks interesting. I'm going to be covering it exclusively in the newsletter that we do here for TFNN. And if you want to get involved with it, because it's going to be a campaign, it's not just going to be it's not just a one-trade phenomenon. We're going to be adding to this one. Because I had I had 2 emails from some of my very, very old friends reminding me of this trade. And so Rich Anderson being one, of course, he was only, I think he was, 20? Oh, my gosh, he was only 20. I think he was 25 or 26 at the time. And Rich was the one that hired Cy Monley from Sylvius Financial, who's Cy hedges 2% of all the crops in the United States, if you can imagine that. One of his farms that he hedges down in Louisiana is 250,000 acres. If you can imagine something that big. It's an old family farm, several families together, but it's really a really big one. Okay, let's move on to a couple other things. The Valentine present will come after the break, so we'll see. And hopefully it will be one of those things where the clown doesn't jump out of the box, but will be interesting to see what his name is. Cy Monley, Cymonley, and it's Sylvius Financial. and you can go and Google him if you like. He's going to be a guest on the show here in a week or so, but he's extremely busy, especially early in the morning, but he will give us some time to take a look at this. Okay, now let's take a look at something that someone sent us that I think is real interesting. You want to go back to memory lane and see if these patterns work, boys and girls. Take a look here. This is the stock. You're not going to believe this, boys and girls. This is the this is the Dow Jones from 1885 to 1899. This actually the stocks, because the Dow didn't come in until 1896. This is what was reported in the New York Times, which was the only way you got these things. But this goes back 140 years. Look at this. This is amazing how the patterns work. Look at the big ABCD Gartley that we had in May of 1898. I remember because I was just getting out of the 5th grade. And then you had the big ABCD going into 1896. I mean, it's just it's amazing. If you really like to look at it, look at the time between 1896. This is when the Dow Jones first came out. Right here, it's 1896, and you'll notice that 3 drive to a bottom pattern right down into 1896. So if you ever wondered if these patterns work, go back 140 years, and we have all of this data. This actually comes from our good friend over in Italy, Mr. Enzo, very, very dear friend, and he's an olive rancher now, olive farmer, I guess, over there, and trades the euro and the S&P and a few other things. But it was really, really interesting to see that was one that really lines up pretty nicely with what we see going on in the markets nowadays. Now, I wanted to bring a chart from our good friend Shane Smolian from wolftrader.net. We're going to have him on just as soon as he gets the time, and he's a busy camper because he's actually was short during that big break. And if you'll notice here that this is the S&P, and it shows the relationship between the shorts and longs, and you'll notice that the shorts got short sometime right after February 1st and had that, the big move down. Now, that was not anything to do with the Fed at all. This is all about just, people putting positions on, and whether they're long or short, and that's really what that's all about. So we'll watch this. We will try to have Shane on. I've spoken with him several times. He's just swamped, and he'll get onto this just as quickly as we can. We'll get him onto the show the best we can. And we have a break coming up in a minute, and then after that we'll get into this thing that I'm looking at right now. I wanted to show you the gold market here, folks, because we had a real interesting pattern yesterday that we spoke about here in the market. We were having that nice little $31 rally, and you'll be able to see here where we had that double top, and then we had the 3 drive to a top pattern leading to the second top. You can see that. And then what did we do? We did the mirror image of that. We made the 135 pattern. And number 5, you'll never guess, it was 61% of number 3 and 38% of number 1 and 50% of the smaller move in between. So there are 3 major ratios coming in there at that 1337 level. Which was up just about $30 from the low. So now we're going to test to see what we're going to be doing, because the low that we had this morning was an exact 61% of that move that led into number 5. So it had really strong support, and it's already rallied $7 from that level. Stay tuned for your Valentine's Day present, boys and girls. 877-927-6648.
TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
It's a special month at TFNN, and with market volatility back, we've decided to hold an open house in our Tiger's Den. For this month only, you can get a full 30 days of Tiger's Den membership without paying anything. The Tiger's Den is our interactive chat room where you can chat with other tigers and tigresses along with the TFNN hosts during each of their programs. For all of the details and to start your 30-day free trial to the Tiger's Den today, visit the front page of TFNN.com before this deal is gone.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, I've posted a chart that none of you know what it is, but it's the spread between July soybean oil and December soybean oil. Soybean oil has been coming down for quite some time now. And basically, I want to go through memory lane here. We're going to go back to January of 1975. And I was, coming out of my debacle from October 1974. I was not trading yet, but I was starting to follow the markets. And I followed this starting in December and then in through March of 1995. And my two mentors for soybeans were Oscar McClure and Dave Nelson. Dave Nelson had market research. He actually, his office was right next door to Jim Sibbett and Earl Haddady up in Pasadena. And Jim Sibbett and Earl Haddady were the two gentlemen that first wrote the very first book on the opening price principle that John Hill and I rewrote 25 years later, showing you the importance of the opening price. But both Oscar and Dave Nelson were specialists in the fundamentals of soybeans. And basically, they looked at soybean meal, they looked at soybean oil, they looked at the crush, the spread, they looked at everything you could possibly look at. And they were trying to, and the market was really low in beans because we had hit $12.99 in beans in July of 1972. We came all the way back to, we were trading around $3.50 a bushel, $3.54 a bushel. I believe corn was about $1.80 or something like that. And I was looking at this, and basically what they were telling me, if you looked at this spread chart that you're looking at right here, is that it was at full carrying charge. In other words, if you bought July soybean oil and sold December soybean oil, the margin on it was $150. You controlled $6,000 worth of soybean oil for $150, and you controlled it for a period of 4.5 months, which was about as much leverage as you could possibly get. The most you could lose on the trade was $150 because that was full carrying charges. Now, we don't have full carrying charges now. We don't have that, but we do have something else that is quite important in the soybean oil that we had at that same time, and that is we have one of our really patterns that we really like, and this, we're going to bring this up to let you folks show it. And this is as of last night. And you'll notice here we have a beautiful Gartley, excuse me, let's rephrase that. We have a beautiful butterfly pattern right at the bottom. We're right near the old lows here from June. But if you went back and looked at this on the weekly, I'm going to make you do some of this work yourself because I don't want to make it too easy for you. And hey, this might not even work. I don't know. This might be my last broadcast. Who only knows? But anyway, this December oil's got everything you could possibly ask for it because this is new crop soybeans. This means these will not be harvested until November, October, November. So a lot of things can happen between, February and, September, October. There's a lot of climate stuff going on. We get the slightest bit of problems in Brazil, India, any place like that. We could see soybean oil take out. This is just, we're looking at a price level potentially of $45 to $50 per pound in the oil. So that's what we're looking at here. So whether it's going to work or not, your risk here is about I would say $500 at the most, and the profit objective would be 7 or 8 times. I'm going to be covering that very exclusively in the newsletter, the 24/7 newsletter, and also those of you that are subscribers that are my students. Of course, I'm certainly going to follow it with that, but it's going to be a situation where we're going to be buying on retracements once the market moves in the direction that we think it's going to go. But first, we have to make sure that it's going to work. Now, just to give you an idea of the amount of money that was involved here back in 1975, my very dear friend Jay Cross, who worked with Amos Hofstadter at Commodity Corporation, he had made a huge amount of money, like most of us did, during the Russian grain robbery in the 70s. And in 1973, he had cashed out near the top of the market in beans with about $9 million. And he bought Jimmy Stewart's ranch up in Elko, Nevada. It was the largest single piece of real estate available in the United States at that time. And yes, I did meet Paul Tudor Jones a couple of times. Very nice fellow, very humble fellow, and very smart. And anyway, the main thing is that when he bought this ranch, I think he paid $3.5 million for it at the time, which was a lot of money, if you'll remember back in those days, because we were coming out of a big recession from 1974, and his father-in-law really. Jay was an old country boy, cotton farmer from down in Memphis, Tennessee, and Vicksburg, Mississippi, and his father-in-law did not like him very much, and so he thought he was, just being foolish buying this piece of property up there, and it brought a lot of problems to his marriage. He ended up getting divorced, and his wife was a secretary to Eddie Horowitz, who was one of the premier folks in legal law for the financial markets, who's one of my very dear friends. And after they were divorced, Jay took a sabbatical for about a year and didn't trade. And when he was coming out of that time period, we were looking at this soybean and soybean oil situation. And he put $50,000 into in the soybean oil spreads. And that $50,000, you added several zeros to it. He cashed out another $5 million in about 9 months later, in September of that year, when that spread went from a minus 150 to a plus 18. So that was 7,000. Yeah, it was a huge investment. What happened was Willard Sparks with oh gosh, now I've lost. Cook Grain was heavily short, and they just kept shorting on the way up until they ran out of money, and basically it just dropped out. Anyway, Peter Borish was he wasn't Tudor's partner. He had a percentage in the business, but he was not a partner. Paul started it himself with Peter. Peter's a class act too. I've met Peter many times, and but Paul Paul Tudor Jones, a very, very wonderful guy. You got to listen to that tape from 1986 called "The Trader." You will really like that. That's you should listen. David, you're right. Anybody, just go in and just put Paul Tudor Jones tape trader, and you'll find it in there. And I paid $100 for it back in '87 when they were trying to market it. And the problem was there was in the video itself, he had some things that just literally turned off some people. You know, the fact that he was a little bit relying on luck when he had his famous Bruce Willis tennis shoes and some other things like that. And and the other one was that Sunday night on his very first trade when he was doing the Deutschmark, trying to, impress the reporter. And he was just a kid. He's only 29 at the time, but he had put a position on where he made $100,000, but he was at risk at $2.5 million on that trade. So they wanted that thing out of there. But he was just a kid, you know. That's how you learn. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I posted the chart of this gold over the past 5 weeks, and this is if you're interested in having some companionship while you're trading. Try out TFNN. You got a couple weeks here free that Tom has been able to facilitate for you. Go to www.tfnn, go into the Tiger Den, and you're going to see some really smart people in there. But take a look at this gold chart, folks. This comes from one of our folks across the pond over in Denmark. If you'll notice here, those really dark lines that happened between the 30th and the 1st of February, those are those $34 moves that we talk about. If you'll notice the dark moves, the last two that we've had here, they've been moving in $20 segments. Remember, the harmonic number on gold is usually $17, but when it's pretty active, it'll expand or contract. So it's been running at $20. And in order to prove that, you can see the low today at that 0.618 was exactly $20 down from the high. And it's already trading up above $13.30 already. It's already gained, $13. So this sets up a potential ABCD here all the way up to that $13.52. And I think once we clear $13.40, we could be in for a really, really big move, because that gold at that $13.10 level, the actual 382 from the low from last December was at $13.18. So it did go $8 below it, but it has held that level. And the touch today at the exact 61% retracement is very, very important from a technical standpoint in gold. It's really interesting. I mean, this is something that I think we got to pay really close attention to into the future. Now, the next one that we want to look at is, I want to just show you the relationship. Now, this isn't up to date because I haven't had a chance to do this morning. That gold chart I posted, what's wrong? It didn't come out? Shut the front door and raise the rent. Where is it? I had it in there. Let's just do it again. Hold on a second. It'll only take me a second to get it up here. I hope, anyway. Yep, I think this is it. Yeah, here we go. Let's get it up here again. There we go. And then what I want to do is, hold on, let's get it up here. I don't know why I didn't post. Okay, there it is. But you can see those really dark lines that are there, the equality of those lines all the way. There's 1, 2, 3, 4 of them. They're all $20 moves. The move on the downside this morning, right after the report, came right in and exactly $20 down from the high, exactly at the 61% retracement from the low on the 8th. So that's telling you that this is very, very important in the gold market. Now, the next chart that I've posted here is for the silver market. I wanted to show you that even though silver is lagging gold by quite a bit, it's starting to show that it's seeing some good repetition here. So if I don't know, the low in silver should have been around 1630 this morning. I don't know what it was, but if you'll tell me what the low was in March silver, it should have been right at 1630. That would have been right at the same price that we were looking at. There you go, 1633, close enough for government work. I don't know what the exact fib number is, but my guess is it's probably spot on. That's what I would think. Mr. Z, if you'd check that for us, I would, I'm wrong by a lot more. The exact, I have to, yes, okay, we'll get a refund out to you just as soon as we can on that box of chocolates. Anyway, let's take a look at that silver just together here, just to see what it's doing as far as the exact number, because I usually think that these things hit pretty much spot on when they come on, and we'll just take a quick look at it here. Let's get it ready here. It was an hourly chart, and we're going to bring it up here. Hold on a second. And we go from the low to the high. The low is at 1615. The high was there. Boys and girls, judges ruling. The 61% on silver, folks, was 1632 and a half, or 1633, and the low was 1632 half. So it hit it spot on, and it's now trading at 1356. It's already rallied 25 cents. So they don't always work, but when they work like that, it's really very, very interesting to see see how it's moving anyway. And we hit 1335 in the gold already. That's already up $17 from the low. So this gold looks like this might be a big breakout type day. I'm not sure, but we'll pay a little bit of attention to it. There is another one, boys and girls, that is really interesting from a technical standpoint, and that is the let's just bring this up here. Let's just get this one going here. Here, let's just look at the S&P here for a minute, and then we'll get on to the important ones. I don't know if the stock market ones are that important anymore or not, but we'll just take a look here. You were just kidding me? Okay, that's good. All right. You're the best, Maria. Anyway, Sarah says hello. Anyway, we'll be looking here at this. We had a potential ABCD up here at this 2680 level. We had a high of 2678.50. That took out the previous day's high from the 11th, by about 5 cents. And then we were setting right at that level when the CPI report came out. And folks, the one thing you don't want to do is to go into, especially a major inflation report or a jobs report, with a position on where you have some exposure. I mean, you can put your stops in, but believe me, on those, your stops are going to get whacked by 10, 15, or even 20 points. I think these would have been, you'd have gone through your stops by at least 10 or 15 points. And the reason for that is liquidity dries up. A professional trader is not going to have a buy in there at 26.66 into a report. If he does, he's going to have a stop in. But, that's just silly to go into a report. Wait till the report is out and then take a look at it. And what we're looking at here is, we had that major bottom down there. That 29.5 bottom was a major 61% retracement. And as we pointed out in the newsletter, there were 7 different markets telling us the exact things. 9 if you included the utilities and the Dow Jones transportation. So that's an incredibly important one. And then now we have this eclipse coming in tomorrow. So this is going to be a real interesting close here that we have here on Friday. And but that's what we're really trying to keep an eye on is how these ratios will give you some spots for support and resistance, and then we'll be seeing what's there is Maria's asking a question about the VIX. We're playing for the VIX, I believe, is heading towards 100. I think it's going to take out the highs of 2008. It's very wild right now, which it should be because we're having a lot of movement, but the VIX has raised its head. The easiest trade over the past 5 years is to sell volatility, and now I think the best thing is to to buy volatility. We bought that at 943. I think it was 963. Several months ago. We risked a point, never got to our stop level. It's had a huge move. I think we're just beginning to start that move, and so we'll keep a very, very close eye on it. But that's one that we want to be watching very, very closely. There was another chart here that I wanted to bring to your attention because I was speaking with Cy Monley yesterday, and I believe this is it right here. This is just give you an example here. This is a picture of Minneapolis wheat, folks. And the reason, we'll cover that when we get back. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, folks, one of the things that the old cowboy's looking at really, really closely here these days is the Japanese yen. And I would like to, hope I've got the chart here. Boy, I worked on it. Oh, shut the front door and raise the rent. Where is it? Oh, no. Don't do well. Let me do the weekly up here. We'll get up here and take a look at it. I just want to bring this to your attention here because we are breaking down into this level. I have to, I'm going to have to do this in segments. Give me a second here because this is important because we are very, very, gold's already flying. It's already up $20 off the bottom, and that's been in since this show started. So, that's a heck of a move in gold. So it looks like they are getting ready to move. They've already moved $20 off that 61% retracement level. However, I'm going to post the chart here of the Japanese yen, but I want to, Japanese yen dollar. 1 second, please. But I have to do this chart on the daily because that's where the real picture lines up so nicely. So if you'll give me a second here, I'll bring this up so we can look at it together. This is really important as it comes to the U.S. dollar, folks, because this is how these Fibonacci's will, people are everything in the news now is that the Japanese yen and the dollar is, major breakout and all this stuff. And if you look at patterns, you don't see that. Just give me a second to, I have to post it to myself, and then that should do it. And then I'll be able to get in here and take a look. And this is worth the time to look at it, in my opinion, because I did a video on this last night to let everybody know what was happening. But here it is. This is the here's the dollar yen right now. Now you'll notice from May through November, look how many times the market hit the 61% retracement. And then in November, it looked like it was breaking out, but it didn't. It just made a new high by about 20 pips and then immediately went lower. But look where we are now. You see, we're right down. We're breaking, just ready to break the 107 level, and that 106.70 is the key level here, because at 106.70, that's going to be the 61% retracement of the low going way, way back there from that weekly chart that you're looking at. So this is going to be a really key. And if you look at that trend line, that's going to come in. If you follow trend lines, that's going to come in right at that point. So their whole world is going to be bearish. this particular cross rate, and it might be the wrong thing to do. Now, how do you handle that? Well, the way you just can't, well, you know, one of the ways you could do it is to see how it gets down to 106.70. And at 106.70, if it's not falling out of bed, and that's only 30 pips from where we are right now, you just put a 30 pip stop on and cross your fingers and, you know, say your rosary and make the sign of the cross, and you'll see if it's ready. The second thing that you could do is to wait to see how the market reacts around this 106.70 level. And that's what we'll do here over the next day or two, is to check that level to see if it's going to hold, because this could be a key to what's happening in the U.S. dollar, because we've had big moves today, all related to the, what do you call that, CPI index. And frankly, you know, I don't believe half those reports when they come out. The other half, I think, are made up as they go along. But this one in the dollar index is the number 2 right after the euro versus the dollar. So it has to be followed, you know, very, very closely. And so we got down to 106.88. Boy, that's only within 18 pips of the, and then we rallied 70 pips. So that there, we might be at the bottom right now. I'm not sure. And remember, we have this solar eclipse and new moon that's going to be affecting these markets these next day or two, and we want to watch that one, you know, very, very closely also. So this is one that we really want to be following. Is the one in the this cross rate. That's a very, very important one. I mean, you know, they take turns being important, but those are the kind that we're, you know, really following with a great deal of interest, because it does. Wow, look at this gold, 1336. Boy, that's one heck of a move today, boys and girls. Okay, like Louis Pasteur said, chance favors the prepared mind. Okay, looking at the S&P, this is what we were looking at come on Friday when we were watching for a rally. This is where we are right now. I will take a look at the oil, I sure will, but you'll notice that all we've done so far is get up to this 382 retracement. Now we're not counting Friday. I don't count Friday, even though it was an up day. Well, you should, because Friday, Monday, Tuesday, Wednesday, this is the 4th day of the rally, and with the eclipse coming in tomorrow, if this is all we get, we're in big trouble. I mean, in the stock market. And if you take a look, here's your homework for today, folks. Everybody looks at the Dow, and they look at the S&P, and they look at the IWM, and they look at the NASDAQ. Look at the real market, which is the New York Stock Exchange Index. Folks, it hasn't even made a 382. Even with those big moves yesterday, it did not make a 382. So that's really important. You know, I think it would really, really pay attention to that. That's really, because if it doesn't get any higher than that, tells you the market is, you know, the camouflage is there. In other words, you're not seeing the weakness that is being exhibited by the New York Stock Exchange Index. Regarding the oil market, you know, we went down to that 58.80 level. I believe we had that marked. Yes, we did. Hold on one second, and we'll get it up here. And then we had a dollar rally, and it's gone nowhere. So this is basically, you know, telling us that we need a little bit of a bounce here in the crude oil to find a good place to go short. Rich Anderson will be on Tuesday. He's traveling right now, and as soon as he's back, which will be Tuesday, we'll have him on, and I'll do my best to have Simonly on next week, because these grains are really rocking and rolling, folks. We've had an incredible Gartley pattern form in the soybean meal yesterday, up around that 370 level, and I'll post the chart. This also comes from Cy, and you'll take a look at it, but we had a beautiful 3-drive pattern there, 61% retracement, and it's already backed off $9 a ton, which is $900, you know, since that time. So we'll see how this thing is going to unfold as we begin to look at it later on. But I'm, you know, following a whole bunch of things right now that look really interesting. They all look interesting, but sometimes they look more interesting than another thing. Now, the reason why I brought that chart, go back to that Minneapolis wheat chart, was because when it was making that high way back last year, you know, when they were having the big drought, you know, they were talking wheat to go $2 a bushel higher, and look what it did. It dropped $3.50 a bushel, right in the midst of the most bullish fundamentals that Minneapolis wheat had had in 30 years. So when the news comes out, it's most probably already been, figured out, by somebody. So remember that news follows the trend, and that's really what you're sort of paying attention to. So just remember, folks, it's the charts that count. They can lie to you, they can cheat you, they can give you misinformation, but they can't hide from you. And if prices are going higher, there's more buyers. If prices are going lower, there's more sellers. Don't ever forget that. That was written on the old Bunko Ramo machine that Amos Hofstadter had. So he was a pretty smart dude. 877-927-6648. We'll be right back.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archived workshops where I show you the exact same patterns that earn me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back, and I wanted to talk just a little bit about the some of these grains that we have going on. There's a big drought going on in Argentina, as most of you have seen if you've been following Mr. Z's posts here in the Tiger Den, which he follows the weather in some of these producing countries very big. But remember that Minneapolis wheat had a big drought too, and you saw what happened. So remember that if prices go up, there's more buyers. If prices go down, there's more sellers. That's basically the bottom line of what you're looking for. So keep that in mind, because they can't hide from you. If they're buying, the prices are going to go up, and if they're selling, the prices are going down, and that's that's the bottom line. The stock market is acting relatively well after the big break. It's came back quite a bit, but look at the gold market, folks. We're taking out the highs of yesterday at 1337.5. We're already at 1338. This sets up a price objective of around 1353 to 1358. That would be that'd be a $40 move in gold in one day. That will light up the tote board on some people's charts. Believe me, if it does that. But it's acting extremely bullish right in here. So it might stop right here, but certainly looks with these wide bars that we've had over the past several hours, so last hour and a half. It certainly looks like it wants to go higher. There will be some stops there at that 1339 level, and I imagine they'll run through those relatively quickly. Now the S&P's already rallied, 27 points off the bottom after breaking, 40 points. So we're having some really good volatility. We want to see that continuing. Taking a look at the Treasury bonds, folks, we've had a little two-day rally. We're now at the 61% retracement. Right now, as we speak, at 144 in the Treasury bonds. However, with this big wide range that we've had well over a point, it's best to wait to see if that's going to hold. So we'll see you all tomorrow. Live every day in an attitude of gratitude, and may God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks!